Is it all about consolidation for certain lenders, whether it be in Europe, whether it be in the Middle East? Is the Middle East something that interests you, Emad?
Oh, definitely. I mean, I've been investing there for about 13 years now. And I think this consolidation is long overdue, and it makes a lot of sense at this point. For example, the UNB has excess capital that Abu Dhabi Commercial Bank could use in a very productive way. This will make about the 5th largest lender within the Middle East, comparable to NCB, the largest Saudi Arabian bank, because as Zainab mentioned, the UAE is a relatively small market, so we've seen adventures abroad. Some haven't gone quite so well, such as QNB and NCB entering the Turkish market before the big devaluation. But it's definitely where they need to go, especially as confidence actually starts to return to these countries. Like the UAE market's actually been a big underperformer because everybody's flowed into Saudi Arabia ahead of a potential MSCI upgrade. However, it does benefit from the stabilization we've seen in oil prices now. And I think some people are even starting to think, well, we're at 79. Why don't we get to 80? With a shock or two, we could even get to $100 next year.
So are you looking at potential M&A play, particularly within the Middle East, but also globally?
Well, I think definitely. I think with the example given of NBAD and First Gulf Bank creating FAB. FAB is up 50% this year, making it one of the best performing banking stocks within emerging markets. These are not companies that are not making money. They just happen to be making less money. And Gulf banks in particular are very highly leveraged, not highly leveraged, they have huge asset cushions. So we're talking about 15%, 20% tier 1 ratios. They're very, very conservative. I think that the Gulf is a special instance in terms of banking M&A for structural reasons. We're not going to see this as much elsewhere because elsewhere it's more about the actual growth from large population sets, which mean that there's a bigger addressable local market precluding some of these elements, and there's not the same type of centralized ownership as you see with the Mubadala, for example.
What about European banking? Because we've heard over the last week plenty of talk coming from Deutsche Bank's Christian Saving in particular, saying it's time to see more consolidation. Is this something you're keeping an eye on?
Well, I think that European banking needs to figure out its identity. I mean, this is particularly the case of Deutsche Bank, because we've seen kind of withdrawal of many of the features that have, of the investment bank, pretty much. I think that banking is becoming more and more commoditized the world over, especially when you see yield curves as they are now. And if you see the trends coming out of emerging markets, such as Alipay and WeChat Pay doing more transactions than Visa and MasterCard, and this type of technology appearing with N26 in Germany, Revolut and Monzo within the UK, banking needs to decide what to do, and it'll probably be a mixture of consolidation and heavy tech plays at this point.